So once again, good morning to you. I will go through the sketch of the Nimblr Candlesticks program, what basically it is about. Nimblr Candlestick course has this two candles. It's a two candle process. A two candle process. Nothing beyond this. Throughout the program, for as many days this goes on, we do around 12 to 13 sessions. It is just about two candle process and how they keep alternating. How they keep alternating. That's all. This is what the program is. Now, why indecision candle? Because it moves within a range. It moves within a range. And how do you know that? By its body. The body of the candle is less than 50% of the height of the candle. So if we see a candle which is something like, say, this candle, this is the high, this is the low. So this actually is the height, which we say CH, which is candle height. And it has a body. So it has an open and it has a close, and therefore this has the body. This is less than 50%. Less than 50% of the full candle height. As a result of this, what it does is that if this is a high and this is a low, the price keeps vacillating in between this. Therefore, this body is smaller. It may have opened here, went up, gone down, and closed here. So this was absolutely what an indecision candle is. Now, what are the benefits of this candle? We will come to this. Next is probably the momentum candle. Next is, what is this? Is a momentum candle. We call this as MC and this as IC, indecision candle. Now, momentum candle is obviously, it moves within a range. Yes, but it is directional. It has a direction. It has a direction. Body is less than 50% of the height, greater than 50% body. Right? This is what, if this is the open, then this is the close, then this is the body. And may have some small wicks here. So this is greater than 50% of the candle light. Same thing here, right? This is the high and this is the low. Okay. So this is the main difference between this. Now, momentum candle, directional, greater than 50% body, indecision candle IC, it moves within a range. It moves within a range. Body is less than 50% of the height of the candle. Now, because it moves within the range, it has its own uses. How do you use it? This is very logical. This indecision candle provides the high and the low So we are more concerned with the breakout now. Okay. Now, one first breakout is between two candles. Between two candles. Minimum two candles. I would say between two candles is minimum two candles. So how can it be possible? One is a low body candle, right? And the other is a big body candle, right? Whenever this happens, then what happens is this is the high, this is the low, right? Candle moves up and this gives a breakout. It is called as a breakout. It is the most simplest form of breakout in technical analysis. Most simplest form of breakout. Now here, this high provides the breakout line. This high provides the breakout value. Okay. So this is the breakout. This is the breakout. I would call it as line. So this is the basic breakout. This is a high which is there and it has a low. This is an IC candle and this is a MC candle, momentum candle. When a momentum candle follows an IC candle, we get a breakout in candlesticks. And we are going to use this breakout to make entry and exit. It is very simple. Many times I have heard people, sir, we don't know how to do entry and exit. How do you do entry and exit? It is a very simple process. How do you do? Suppose this high was 217 and this low was 223, right? So what we do is we feed in orders, right? At here I'll say orders, we fit at 217 plus 0.1%. Now this 0.1% is equal to how much? Is 0.21. Okay. For your ease of calculations, if Nifty is 18,200, 0.1%, this will come every now and then to you, will be 18.20. If Bank Nifty is 43,000, 0.1% will become 43. MC candle, momentum candle, high and close must be above previous IC if it is 1 or bunch. I'll come to the word bunch. You can say range also. Bunch high. This is for upside. Upside. And same for downside. The moment you have this kind of situation here, this high is done. Okay. So this high is done, but the close is not been done. The close is not moved above. Right? So this is what happens actually. And therefore, we say that probably here the candle closing is about here. We say this is what the close is. The next candle begins. Next candle begins. here, probably moves down here, up till here, may have done here, right? And this is what it is. Here, this is the high and the close. Now here, what happens now from here is the range increases. Now this is the high of the new range. Okay, this is the high of the new range. Now again, what will happen now is, say we are here, we are here like this, and we did this. It fell down, fell down, it fell down, it fell down, it fell down. This is the body of the candle. It came down till here and again moved it. Right? Now here what it does is that, what was the low here? This was the low. It went below, but it did not close. It did not close. It did not close. It closed within this first candle. So what it only does now is a kind of a range expansion. The range expansion happened. Now this becomes the low. So now there is one candle here, 1, 2, 3, 4, 5 candles, and there is no breakout. This happens and there is no breakout. So you have to keep quiet. Next is, you are going to have this point coming in. So start here. You move down. Right? Same thing here. Move down. Now the candle closes here. Now this is a breakout. Why? Because the MC candle low and close both are below bunch low. The range expands. So new low is this. Now this is a breakout. Now this is a breakout. So breakout line now, this expands, right? This is the breakout. This is the range high. So this is called as a punch. This is a breakout. The breakout is coming downside. This is the breakout. The breakout line is like this. Now what happens? The next candle will come here. The next candle will come, start open here. It may move further down. Yeah. Right? Move further up and right up to here. And only does this right up to here. And this is what will be next candle. The moment this happens here, price will always come back to breakout line. So what was the breakout line? BO line was this. It will come back, touching here, hit here, hit here. It will come like this. It will even move further up. It can move further upwards. It can move further upwards. It comes here, it moves further up, it will move up. Now, this is typically what happens in candlesticks. Now, what do we do here? We placed our BO line here. We placed our orders here. Right? The orders are, if this value is say about again 217, so our orders will be placed at 217.20. So this 217 point, sorry, not 20, 216.80, because we are moving down. So this is now my order level. This is my order level. $216.80, right? I will place my orders over here. And this is again called as, this whole thing is called the process of price coming back, is called as a retest. It's called as a retest. Okay. Now you will get your orders and this is your entry in this case. Now this is a case called as what we say as bunch. You can call it as range, no issue. But we don't call it as range because we have later on called as range breakout, open range breakout, ORP. Therefore, we call this as just bunch. It can happen anywhere. This bunch occurs anywhere in the chart, in the price. You will find a lot of this. Every time this structure will be formed whenever there is a sideways action. And then the breakout occurs. Then the breakout. I'm coming where to place the stop loss, meaning where is the location of the stop loss. Okay. In this whole game, which you did now, this was your IC candle, this was your high, this was your low, right? Then this was a breakout, right? Now, this was your same low. If this was your low, you'll say about this is your low. Your stop loss is going to place below any IC. It is placed below any IC. Never, 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 never below an MC. So in the trailing process, when you trail, suppose if this is what is happening, and this is an MC, and then again MC occurs, and there is an IC, and there is another IC, then again MC. Okay, your stop loss will be placed only below this SL, then not here, not here, here SL. Then you can trail your SL here, trail. You will never move or trail your SL up on seeing a momentum candle. You will never do this because momentum candle has some trait which I'm going to come to. It is a very dangerous thing. So these are the MC. Only below this IC you will trail. Okay, this concept you keep it in mind. Where to place SL? Location is this. Stop loss. What do I mean dual? Higher time frame and lower time frame. Okay. Whenever we have a higher time frame, lower time frame, we have two higher. What is there's a ratio between them? Why do we have? So first, higher time frame is for what? For used at the time of placing order. So along with order, we use only higher time. And after you place the order, higher time frame, and when you find that your trading is doing well and you need to capitalize and lock your profits, we use lock your profits this, right? So you can use it for trailing. The trailing stop loss, this stop loss, higher time frame stop loss, is again below IC, but it is intraday. I'm talking, only giving you intraday trades, 0.4%, and this is 0.1%. LTF and HTF for me. See what you are very comfortable, right? So what is your comfortable? What is your comfort, right? How many times you keep watching the chart, right? If you're a very tense person and you want to watch the chart regularly, then regularly. Comfort is regular watching. Now, why regular watching is your time frame has to depend upon how regularly you are going to watch. Okay. So if you say my time is 15 minutes, so it means you will see minimum once in 15 minutes. Okay. If you're a 1 hour trader, there are people who say 1 hour trader. They don't have time, but once in an hour, once in a day, 4-5 times in a day, I will watch the chart because I'm working, I'm not allowed to. Then you are a 1 hour trader. So comfort is regular watching. If you're a regular watcher and you are on the regular watching, you are on the screen, then it can be 1 minute also. Yes. People have a lot of fear about 1 minute, but believe me, when you do the course, you will feel very normal with 1 minute and you will like the speed of 1 minute. You will be very comfortable with 1 minute. And then you realize that 1 minute are the best time frames to know your next trade. I'm not saying to trade, to know the scenario, what's coming. The predictiveness of 1 minute is much faster than 5 minutes, 15 minutes, 30 minutes. So regular watching, if you're going to do regular watching, then it is for you, the best is 5 minutes, according to me. Okay. So now this becomes your lower time frame. Now this is how you decide. That means the time frame at which you will keep watching the chart, or the time frame which you watch the chart regularly, what you are comfortable. So that is your lower time. That is your lower time. And once lower time frame is decided, then 1:5 or 6 is your higher time frame, right?